Hey folks, Dan Frio here with your Friday update. So TGIF, I hope you guys have a fantastic weekend coming up, but today we're going to talk briefly, and it's going to be briefly about the housing market. Yeah, you guys are probably saying, okay, I had enough of this stuff, but that's probably why you're here. Figuring out real estate. Is it a good time to buy? Should you rent? What different programs are available? But I came across a video this morning, and it was by Soch Realty, and they do a fantastic job over there in a lot of their content. And I was watching their podcast last night, and Todd over there said that there was over 1 million people still in the forbearance process or home modifications and things like that. And that prompted me, okay, guys, a lot of the stuff that you're saying is actually backing up what I'm telling you. So I came across a couple channels a couple years ago, and they had me on their channel, and I started talking about forbearances and the COVID relief packages and stuff like that. And they're like, we really don't know what you're talking about. Now, this is when it was in its infant stages. So now we progress from 2019 or 2020 to 2023. And now there's still a bunch of havoc in the market, but everybody keeps saying there's going to be a housing crash, and I'm on the other side of that coin. And I think a lot of people are starting to realize that's on that side of the crash coin that, okay, maybe there are some things here that Dan has a point with. So one of the things we want to talk about is there's over 1 million people still in some kind of relief when it comes to mortgages. Okay, think about it. 1 million people or 1 million households or 1 million mortgages. Okay, we're going to cap it that way. So let's go into where my analogy is. If you don't have a lot of product in the market, but you still have pretty good demand, it's not going to really crash prices, because in 2008, that's the hinging point for everybody. They're like, okay, in 2008, we had job losses, so that means the housing market's going to crash. Well, that's coming to be, they're finding out that is inaccurate. And then they're like, okay, home prices skyrocketed as high as they could be. So it's 2008, similar to that. So what happened in 2008? The world crashed with that. So when we say, okay, the jobs market and the inflated house prices equated out to a 2000 housing crash, agree. But the culprit behind that were the mortgages involved in those loans. So unless you understand that dynamic, you don't get any of this. But let me prove my point here. Let's go over to some of the information that we see on the screen. So here's foreclosures, okay? This is basically, let's go back to 2008. How many foreclosures were there in 2008, 9, 10-ish? Almost 1 million. Okay, so now you're going to see if those houses came on the market at that time and created this much of a havoc in the housing industry. That's why we crashed, because there was 900,000 houses that otherwise wouldn't have been on the market. Okay, where are we today? So let me get my head out of the way like I usually do. And we're down here. So we're just peaking maybe 100,000. So that's 1/9 of where we've been. So people might say, okay, Dan, well, this is starting to go up, it's probably going to go all the way back up to here again. Again, guys, this was caused by the event or a program creation of non or subprime mortgages. Okay, they've been around for years, but this was basically the end of it when this crashed, because Moody's rating agency were stamping these bonds A-rated. People all over the world were buying them. Pension funds, I think it was the Chicago and California pension funds went almost bankrupt because of this. So that's what happened. So you have millions of people that were in forbearance. You have now millions of people in the relief packages or the relief programs when it comes to being behind on your mortgage. So the banks don't want your house. Okay, they've learned in 2008. So what they're going to do is they're going to modify you. You heard about the new 40-year mortgage. Well, the new 40-year mortgages are those that are in an FHA loan currently and having trouble. So your servicer can recast your loan to a 40-year payment to bring down the payments even lower than you would pay in rent. So they want you to stay in the house, bring a payment down that's down to an affordable level for you. They'll throw any balances that you have in late payments or anything to the end of your loan. It'll be one big hefty balloon loan at the end, but you don't get foreclosed on. You don't have to move out. You have probably a housing payment or a shelter payment now in line of which you can afford. So it's basically a win-win for everybody, okay? But new home buyers out there that aren't getting into these 900 or 1 million new homes in the market, okay? So what happened back in 2000 and 2020 and 2021 was a program that came out that was called Forbearance. So it doesn't pertain to you guys unless you currently own a house. But if you're a new first-time home buyer, I'm going to explain to you why a lot of these houses aren't coming to the market. So back in 2019, they came out with a program saying, if you are affected by COVID and there's no strings attached, you don't even have to validate it, just call your servicer and you don't have to make a mortgage payment for up to 18 months. 18 months, okay? This was all during the same time frame that you didn't have to make a student loan payment because student loan payments were in deferral as well. So you didn't have a house payment and you didn't have a student loan payment. I don't know about you guys, but if I didn't have any of those, I'd have no bills. So that's what happened to a lot of people. That's why you saw in a lot of the charts I did in the past where consumer disposable income spiked to the highest level ever in history. Okay, so now we fast forward to 2023. Basically, almost all these relief programs are gone except for the modification piece of the program. And there's still, like I said before, 1 million people signed up in that program. So those houses, again, aren't going to hit the markets. Okay, how many houses are in forbearance mode right now? Very few. Okay, here's where we were at the beginning of the pandemic back in these days. Here's where we are now. Basically, it's dismal, but there's still a lot of people in the modification piece of the puzzle that's doing that so they don't have to be forced to sell your house. So remember this. What caused the biggest crash ever in history in 2008 was people were forced to sell their houses because the banking system at that time wasn't basically didn't have the technology and didn't have the whereabouts or the knowledge of how to do all these modifications. So basically they let all of these foreclosures basically get foreclosed on. And that pushed so much housing inventory to the market. What happened? You have a glut of supply, way too much supply. The demand stayed steady. Demand even went up a little bit, but just not enough to absorb all these houses that hit the market. Thus, we had a housing crash. You're not going to see it that time, guys. And I just wanted to debunk a lot of the news that's coming out. But kudos to you guys, Todd over at Sach Realty for that. He had a great video today. Check him out. He does a good job over there. Do want to give you some input into what's going on in the markets right now. You can see right through here. This is what's happening to the MBS market. We follow the MBS market here on my channel because people want to find out, what's going on with rates. So you don't need to watch the Treasury. You sure as heck don't watch the Dow Jones or anything. How do you figure out what's going on with mortgage rates? Well, you follow the mortgage-backed securities market. It's a bond that trades on Wall Street. It's easy to follow. Here's what's going on in the price. You can see right here, 100.70. The number's down 27. All you need to know is if this number is down, it's bad news. Because when the price of a bond goes down, the yield or the rate goes up. So we're going to probably see about 1/8% increase in rates today. That's why you shouldn't be trying to time the market on your own. So if you're out there and you're looking to get pre-qualified or you're looking to focus in on letting some advisors or educated mortgage advisors help you on picking the right program, picking the right rate, and picking the right time to lock in that rate. I hope you join us and here at the Frio team to get some assistance in regards to that. And if you'd like to learn more about what we do, how we do, just check out my YouTube channel. It's the Rate Update with Dan Frio. I think there's now 2,500 videos on here, so you got to find something that tickles your fancy in all these videos that we do on a daily basis. So thanks so much, guys, for watching. Have a fantastic weekend. I'll see you next week. Take care. Bye-bye.